It's Good Friday, and each year at this time I do my best to look for unwary adults, to ask them, what do you call an anesthetized rabbit? And the answer to the riddle is, it's the ether bunny. Used to be able to tell that to kids, but they don't know what ether is anymore, but it's worth a try. This has been a striking week, what the military would call target rich. Mortgage rates broke down to the lowest level since last November. Not far, but we've been in a long, choppy pattern ever since the end of November, and we thumped down just below the bottom of that band. Normal circumstances, you break at the bottom of one of those bands, and it says that we're going to go lower. And we might, at this huge spike the day after the election, wandered around for 5 months, and now we just dropped. How far down is down? Pushing down are overseas central banks, the European Central Bank and Bank of Japan. German bond yields have fallen from 0.48 to 0.19 in just a month, and ours have followed. And as you can imagine, if your choice is to buy a German bond at 0.19, a U.S. bond paying 2.22 looks better. The second thing pushing down is geopolitical risk. Really hard to quantify. You can't look it up in the newspaper and put a numerical value on it. My own hunch is that Trump's people on the security side are very good people. They are not warmongers. They're not looking for a fight, but they are very much looking to restore American initiative after a rather passive last 8 years, really ever since Iraq. Mistakes are made, but there is some movement to safety in U.S. bonds that's pushed down on rates. But the big day was Wednesday afternoon. It's been a big week for Donald Trump to change his mind. I'm a big fan of changing minds. There's a very, very old line that is ascribed to Winston Churchill and John Maynard Keynes, that, saying in frustration to newspaper people, when my information changes, I change my mind. What do you do? But the sheer magnitude of the mind changing was really something. He embraced the Ex-Im Bank. He said China's not really a currency manipulator. But the big thing that broke through the bottom of that rate structure, after markets were closed, Wednesday afternoon, he said, a reporter asked him if Janet Yellen is toast to be reappointed as chair when her term is up next winter. And he said, no, she's not toast. I met her here in the Oval Office and I like her. It's too soon to talk about reappointment, but I liked her. And I like low interest rates too. And the dollar's too strong. And the combination of all of that, thump, down went rates after the market was closed. Now, I'm going to conclude with the weirdest part of all of this, which is the whole mortgage world and news media rely on Freddie Mac's weekly survey of mortgage rates. Freddie surveys Mondays through Wednesday morning, releases the news on Thursday, which a lot of media don't pick up until Friday. Freddie missed the news. Rates have fallen near 4% since Wednesday afternoon. Freddie doesn't know, and so nobody else knows either. The media don't print any other surveys. They don't print direct lender information because, of course, we can't be trusted. So if markets stay exactly as they are, next Thursday, Freddie will announce the news, which took place last Wednesday. In a really cruel world, maybe next Wednesday, rates will suddenly pop up. The Fed would say something like, yeah, we hear all of this stuff, but we're still coming. We're still going to tighten, maybe at our June meeting. And rates jump back up. And Freddie announces the next day, rates have hit a new 5-month low. Can't imagine how angry consumers are when they've just flipped open their electronic Wall Street Journal, which says rates have fallen just below 4%. And you've got to tell them that actually that's week old news. But if it was easy, everybody would do it. Have a happy Easter.